listening to Inside Real Estate, your source for all things mortgage and real estate related. The show that brings you all the hottest topics and insights directly from those who know it most. Now sit back and enjoy the show.
Yes. What is up, everyone? Paul Apostolakis, Brad Weisgerber, Salvatore Cusmano. We are here with another episode of Inside Real Estate. Today, we've got a very interesting guest, Mr. David Schroeder. He is the Executive Vice President of Caliber Home Loans. He'll be coming on in a minute to talk to us about all the great things that they're doing over there. And we'll be asking him some poignant questions about what he thinks that the market is going to do, along with some new things that are going on with Caliber and an acquisition that's going on with them. But boys, before we start, please, if this is your first time listening, please like, share, subscribe, sit through the whole episode. It'll probably be pretty good. If you coming back, thank you for returning. We appreciate your patronage. Other than that, boys, how are you?
Good. How are you?
Yeah. All right. You guys are full of life. Yeah. Full of it. Sal's trying to get a flight fixed, so he doesn't have a seat. He's going.
Yeah, nightmares going on in the background. I'm just like battling appraisers, Delta. I'm like trying to smile, but yeah. Nightmare.
Smile through it, man. Just smile through it. That's all we can do. Yeah. So without further ado, I want to bring Mr. David Schroeder on the show. Mr. David Schroeder, how are you, sir?
I am doing great. I'm glad to be a part of it.
Yeah, man. I reached out to you. I know that I've known you for some time, so I've wanted you on the show before. So I'm glad you made it. I know that you're in our backyard today, but I know you're traveling a lot. So thank you for making it. Much appreciated.
Absolutely. Like I said, it's crazy that we've been trying to hook up, and podcasts, you can be anywhere. And as calendars end up, I'm right down the road from you here in Southfield, Michigan.
Yeah. We're doing everything remote now. Fortunately for our guests, because they don't want to be in the same room with us, really, David. It's not healthy for anybody involved.
It's mainly you. They don't want to be in the room with you.
Yeah, it's me. Maybe me totally. In general. So David, one thing that we started, since you're new to the show, one thing I always like to start with is, how did you, in all your infinite wisdom and glory, get into the mortgage business originally? Because I don't think many of us wake up and say that we're going to do that for our living. But so how did you end up doing mortgages, man?
I when I graduated from college, at the time, one of the big movies out was Wall Street. And I thought, that seems like a pretty good gig. So I went and got my Series 7. And about 2 weeks into it, I was like, yeah, this isn't for me. We were calling out of a Kohl's directory and trying to ask people for money. So I had to reset pretty quickly. And I actually answered an ad in a newspaper. They were hiring loan officers at a retail finance company in Colorado at the time, and started that way out of a strip mall. And I tell people it was a great way to get into the business, because at that time, it was literally like you would sell the loan, process the loan, run the docs, close the loan, and then ultimately collect the loan if they didn't pay. And so, it taught me a lot about the business, and also about, the consequences and kind of real life, people getting into loans that help them achieve their dreams, which is great, because they would come to the branch and make payments, and you get to know them. And also, some of the downside of having to go out and collect from people who really shouldn't have got that loan. So I'm really thankful for that opportunity to get in the business the way I did.
So you're in a strip mall, flinging loans.
Yeah.
All right. Which is funny that
I always say that's the path that you took, being able to write the loan, process the loan, close the loan. I always say that is the best way for any loan officer to kind of start out in the business, because it gives them a full understanding of the process and what happens. So it'll help them in the future setting up a loan as just a loan officer. But not many people do that these days. They hire any guy off the street, any guy or girl off the street with a high school education to just make phone calls and sell loans, which is
that's right.
Kind of crazy, because they don't understand what's happening in the background. They don't know how to answer those questions.
That's right. And like you say, Brad, it's pretty siloed then when it's done that way. And, I believe that it gives me greater empathy for what's going on the operations side, what they have to do, and the consequences around that, as well as, and I think you kind of pointed to this, better packaging of the loan. I think, we can anticipate then when we're taking an application of what's coming downstream. So, yeah, like I said, great experience for me. And I think where there's opportunities to do that, people should take advantage of it to really understand all dimensions of the process.
Yeah. So let's fast forward a little bit. You're in the business, and so now, how do you end up getting into like a leadership role? What was that like?
Well, really, it was part of that, working out of a strip mall as a loan officer. I'd been doing that for a couple years, and the branch manager at the time where I was ended up leaving. So I took over that branch for a couple years back in Arvada, Colorado. This was in the early 90s. And then after I did that, I went to the home office. This was Bank One Financial, by the way, back in the day, and ran support for about 60 branches that we had at the time. And, one of the great experiences I had in doing that was that every day I would get a pallet full of all the turned down loans from the branches. And then I would field calls the next day from the branch managers telling me why those loans should not have been turned down. And sifting through them. And then I had a standing appointment with the senior vice president of underwriting every night. And we would sit there and go through, the 10 that I had weeded out and felt like we should make. And again, you think about what are the things that shape you as a leader, and the things that you kind of think about. And that was a big one for me, because it taught me about kind of divining what's important, but also when we talk about packaging, like, okay, what is going to be important to an underwriter in a negotiation, kind of setting that up. So again, all of this fed into it.
Yeah, and as sophisticated as people think mortgages are, you literally probably had a pallet of papers.
Yeah. Oh, absolutely. A pallet of papers, and sheets of letters of explanation that both I created and the branch managers to try to get those loans through.
That's awesome. So I know that you've been with Caliber for about 2 years now.
Yep.
So tell me about that transition and kind of what your role is today in what you're doing.
Yeah. So, I had the opportunity over the, really the last, call it 20 years before that, to work with folks that I had known, from Decision One up through, it was really the same crew. And so this opportunity with Caliber came up. I wasn't, searching for it, but a really interesting company, and the desire to grow into different areas of wholesale. And so when they approached me, it was an outstanding opportunity. And, the biggest thing for me at the time, and I mentioned that because of the folks I had worked with for 20 years, is that, look, I mean, like yourselves, I work hard every day, and it's important to me to work with people that I like and respect. And that was the biggest risk to me, is that I didn't know anybody at Caliber. And so coming over, that was my biggest concern, and kind of how would I do that? And very early on, I understood that this was a company that had great integrity and great channels of communication to make sure that we were all working together. And, even with COVID, which, was an incredible kind of stretching thing for all of us as leaders, to be 2 months into joining a new company and then go totally virtual, it's been remarkable to me how powerful my 2 years has been in joining Caliber, to see the relationships that we've been able to build across the company, as well as the progress that we've made. I was on a call yesterday with one of our top partners and one of our top AEs. We were just kind of going back through everything that's been done in the last 2 years, and again, life moves fast. You can miss some of that, and you're like, wow, all the things that we've been able to accomplish in addition to production. I mean, I think everybody has a great story of production over the last 2 years, but when you think about kind of building teams, building technology, building process that's going to help us not only have a better mousetrap today, but sets us up for big things in the future. I think you'd be hard pressed to find a better story than Caliber, which I know we'll talk about as well today.
That's actually what I want to get into. So obviously there's a lot of competition in the space, David. I mean, there's no shortage of competition in the mortgage space. From UWM to Quicken, and Caliber's right up there with those guys in performance over time with us in the wholesale side. And I know there's a very strong retail side at Caliber. So what are some of the initiatives that you feel Caliber needs to take over the next year, 2 years to really position themselves as a competitor, a high level competitor against all these other people.
Yeah. Well, look, I mean, you always start with you, frankly, as our partner, what are the things that are going to help you be successful? And if we build around those things, then we're going to be successful. So, the start of it is that you've got to impress your partners, whether it's realtor partners or your clients, every single day. And so we've got to create the experience and the confidence to do that. And at the top of the list, I mentioned technology is our portal that we're building out. We've got a really outstanding portal called H2O, and it was built for the retail group, frankly. And so it's got a lot of stuff in it. I mean, it's very, very powerful and rich. And what we've been working on over the last couple of years and continue to do that, we think will probably be done in 2022, is simplifying that so it's more accessible. As you guys know, if you're an airline pilot, it's pretty easy to fly an airplane because you do it every day. But if you or I were stepping into the cockpit, it's pretty hard to know what dial does what and exactly kind of how to follow that in a smooth way. And so we're working to simplify, to unleash the power, if you will, of H2O and make it so that you can sit down and make it iPhone easy, that you sit down and know exactly what to do and how to make things work. And unleash that for you. So that's the biggest thing for us to start in making that easier and more accessible.
Yeah, and just for the audience so they understand, when we as a broker set up a loan, we go to the investor's site and we have to use a lot of times their portal. And it's a big differentiator, I think, from company to company. That's what you see the biggest difference in is, okay, that's what I'm interacting with on a daily basis. That's what I'm putting my loan into. That's what I'm getting findings from. That's what I'm working in an everyday format. And, currently I would tell you that, UWM has a really nice portal. You guys have a good functioning portal, but it is not an uncomplicated thing to set up a loan. Having a proper LOS or a portal, for us, it's an LOS, for you, it's a portal. It's kind of the same thing. Why is our industry so, why does our industry have such a hard time putting together something that you would think would be really a lot easier?
Well, I think like you point to the fact that, while the business is not rocket science, there is complexity and there is different interpretations, I think, in how things are calculated and sequencing of how you make the cake, if you will.
Yeah.
And so, people come at it from different directions and they come at it at different times in their evolution. Like I said, I think for speaking for ourselves, we come at it that we had developed this really robust LOS, as you say, because that's really what it was for our retail group. And we wanted to open that up for our broker partners. Now, that's good in the sense that there's a lot there. And the challenge to that, like I said, is just there's a lot of complexity. And so we want to make it easier to do that. And you point to exactly the challenge for our brokers is that you're dealing with multiple lenders to get the best value for every customer. And so it's like jumping, if you put it in the consumer's mind, it'd be like jumping from Amazon to Barnes and Nobles to Sally's Corner Bookshop website. Right. You're kind of all over the place trying to figure out, do I pick up the phone for this or do I send an email? Everybody's got their own process. And relationships, this is a relationship driven business. At what point do you kind of hit the button to talk to somebody? So, there's a lot of that in there. And I think that as with everything we're seeing in society, that will continue to get simplified, both in the portals, because more gets automated. It's more, we can do more and allow our partners to spend more time supporting customers. And at the same time, there are interesting developments in the marketplace. Like, I'll just point to one being Arrive, where they're bringing together multiple portals so that you have less of a need to go to individual places and you can consolidate more of that information. So, I think the best is yet to come for our industry. It's exciting to see all the things that have happened over the last 20 years. And frankly, probably more than that will happen in the next 5.
Yeah. No,
I think,
go ahead, Sal.
Just something to touch on too, like, you mentioned, right, like it'd be easy for a pilot to come in and look at the cockpit and fly the plane, right? But like brokers are definitely, most of them are not anywhere near pilot level when it comes to technology, right? Most of them are used to one thing, or get stuck in their ways. They want to take the easier route.
That's
and
right.
when you have like a captive group of retail, right? I mean, obviously you train them, you have people on staff to train them on how to use the system, you have IT departments. So I think like a lot of lenders, and was H2O originally Ellie Mae based?
That I'm not sure. That's probably before my time, but I don't think so, because it's fairly mature in
Yeah,
that area.
I know a lot of lenders use Encompass, right?
Mhm.
Their system was based upon Encompass, which seems to be over time being phased out, right? It's expensive to use for brokers, and a lot of lenders are switching away from that as well. So it's good to see some evolution, but I think it's pivotal right now, because everyone's chasing essentially UWM's system. I almost wonder why UWM doesn't license their system out to everyone, right? So from the standpoint of being friendly to the broker, right? Have you seen like a lot of internal talk about what works for retail, or is it like, no, like that might not work for all these brokers, we want to build something completely different?
No, I think that's exactly right, Sal. I mean, you start with what we had, which is pretty retail centric, and you kind of said, whether it's training or just repetition. I think it's mostly just repetition. I used to have an operations partner that would say, you're going to love us, then you're going to hate us, then you're going to love us. This was with a different system, but it applies here because you see the power early on, and then it's kind of hard. It's like anything else. It's new. It's not the same system you've used. So it's like, oh my gosh, is this worth it? And then once you get it, it's like, okay, great. This is like riding a bike. And so that, the thing is to try to eliminate that middle part, but also to make sure that people have the resources to get through that quickly. But all that said, what we have to do is evolve the system to be that broker friendly kind of iPhone easy that I talked about earlier, Sal. And so, like I mentioned yesterday, I was on the phone with a partner, and we were doing exactly what you suggest. We are rolling out a new LE creation process to our portal, and we call our new portal Blueprint. So we were showing that it's live in production for a limited number of partners right now, and we were just getting their feedback. One, overall, this partner was saying, "Hey, this is fantastic. I love it. I love this." But they were also helping us with things like, I wish you would put that button right here, or I wish you would show me this at that moment. And those are the kind of little, call it inches, that make a world of difference, because they stop you from having to make 2 clicks instead of and just have that information right there. And so getting the broker feedback, like any kind of technology development, getting the user feedback is critical. And that's what we're so focused on right now, is really making this a broker-centric portal and experience.
And it can be a fine line between, trying to make things easier and easier for the brokers and making things more automated. And then you go to the point of certain other lenders that kind of make it so automated that they take away everything that a broker can do. So like at one of the lenders, we can't even run AUS. We can't run DU or LP.
Mm-hmm.
We can't do it, which is horrific. As an independent, loan officer, I don't work for you. I want to be able to, run my loan through your system, but I can't, which is really frustrating. But they think it's easy as anything, but it's not. Right. It's frustrating.
That's exactly right, Brad. So I'll give you an example. Just since we're talking about yesterday, we have a feature in there where it would calculate some of the fees, and we've actually built it so that the broker can edit it, but it wasn't obvious at that point that if you hover over here and click this button, then you can edit it. So the partner's like, hey, this is great that I can do this, but we need to bring it to the front. So like you said, giving people, making things so that it's easy for you as the broker, as the loan officer, to do it, but at the same time giving you the power to control the experience without getting yourself in trouble. Obviously, from a compliance perspective, that's kind of the sweet spot that I think we're all looking for in the industry, and certainly at Caliber.
I mean, it's got to be difficult, right? On one end, you got a whole bunch of brokers who bitch that they have to do anything, right? And then on the other side, you have the government creating things that don't make sense. Like, why did we have to go to a 3.4 from a 3.2, right? Like, for what reason, really? there's not too much different on there. But regardless, right, I think that was a horrendous rollout from Fannie Mae, right?
Yeah.
With the 3.4 file that like everyone had to accommodate that
nobody was ready for, really.
Yeah, how was that, right? I mean, that was something that what was that, March this past year?
Yeah,
that rolled out, and like we were using Calyx Point at the time, and it was like horrendous. Like we couldn't get anything done. Like there were so many errors, we couldn't run DU, and then we were put in the lender system, and nothing transferred over. And mind you, for the most part, it seems all ironed out everywhere for the, to a degree. But like that's the other part of it. You could build this whole entire suite system, and they could say, all right, 3.6 out, whole system's junk.
Yeah,
right?
well, and we all saw what happened with TRID, which I think, for the most part, TRID probably ended up being a good thing. I think most systems got a lot better because of it and forced people to focus on the experience. But, like you say, you can build the best system in the world, but, the government can come in and force us to go another direction. So we got to adjust to it. And at the end of the day, I think you point to the right thing, which is that, our job as lender partners is to build a system that balances, the critical nature of keeping everybody out of trouble and making sure that we put you in the right place to stay compliant for consumers. And then also that there is this element of everyone wants it their way and everybody's at a different spot. We've got loan officers that are just getting in the business, and we've got, people that have been in the business 20 years and they know damn well what they want to put in that fee box. They don't want our help. So we've got to find a way to make a system that accommodates everybody. And to the extent that it doesn't directly accommodate them, that we're clear of how they can work around it or how, it all balances out for the better. So I don't see that as being something we're going to solve in the short term, but we'll never stop trying and never stop listening to what people are looking for.
So David, I know you guys have been acquired recently by New Res. Talk to us about what that does for Caliber, what that does for you and your team. And what does that open up for you guys, or does it open up anything?
Yeah. So we were acquired by NRZ, which is a publicly traded company and I'll point to a couple things that are really important about it. First of all, we acquired some amazing team members through the New Res Wholesale division that we have merged in with our Caliber team. So, we have roughly 35 account executives that are just tremendous that we've been able to add to our team and the partners that they bring along with them. So, look, just like we're talking here today, sharing ideas, there's just great ideas that we're getting from each other and sharing. So we've put a big premium on communication, both with the partners and the AEs. So that's the first thing, we just get better there. And the operations team, the process, all those things are coming along. Even the Lion portal that New Res partners had used, we've been able to go deep on that and pull some things out that we'll be incorporating into the Caliber Blueprint H2O portal. So there's great things that come with that anytime you bring two companies together. The second big thing that I think most partners are going to feel and already have started to feel is that NRZ is a REIT, which is a real estate investment trust. It allows for basically product development and the placement of product into that REIT. And so the most obvious output of that is what we call our SMART series of non-QM lending that we're putting in there. So we have 3 different product series within SMART, Smart Vest, Smart Edge. And what they do is allow partners to get into a new areas of business that I think people are getting more comfortable with. There's a feeling, some feeling, I think, with non-QM that it's subprime, and it's really not. It's allowing you to get into interesting businesses, interesting segments of the market. And that's more critical than ever. I think most of us believe that the market is going to tighten over the next 12 months. And so, look, having the ability to go in and, for example, with Smart Vest, it's really for people who have multiple properties. So, those kind of investment property owners, that this is a way to get in with those kind of customers and give them something really interesting. The balance sheet products that we have, all these things are going to be really, really important in getting out there. And we've seen tremendous response to that in the first couple of months. So we know that we're going to be able to do that. It's also going to allow us just in general to open up the product box going over time. And we're also adding jumbo, those kind of things. So, that's really big, I think, for new res for our customers. And then the last thing is that as a REIT, again, we're retaining servicing. That's part of the business model. And so, you as a broker, you're looking to keep your customers for life, to take care of them in every way, not just the origination experience, but the servicing side. And because we're holding that servicing, we now have the ability to extend our Reconnect program, which, provides some really, really interesting referral opportunities for our broker partners. And so, look, if somebody's out shopping on our website, we can get those signals and then pass it back to the broker and say, hey, now is probably a good time to contact your customer and find out if there's something you can do for them. And so these are the kind of things that we can really uniquely do and build over time, because we know we're going to be holding that portfolio. So those would be my three big things of why NRZ acquisition of Caliber is just a major, major win, not just for me and our team, but for all of you as our broker partners.
Yeah, so for sure. I mean, you hit on it a little bit. So 2022, the outlook, obviously, I do think just consensus is that we're going to have some tightening going on in the marketplace for sure. A big part of that is going to be new product development. Do you see more and more new products coming to market because of the tightening, or is it just because of the natural evolution of the business?
I think it's a little bit of both. I mean, I think that there's certainly, as the market starts to tighten, I think there's a recognition that this is a great business to be in, a great asset class to be in. And so, people who are building bonds, building securitizations, see this and say, hey, this is a way to continue investing in the U.S. housing market in a way that's very responsible. Like I said, this isn't subprime lending. These are very, very highly qualified customers. So,
Right.
One, I do think that helps in the tightening because there's more demand. I also think that, with data, with the different tools that are out there now, we can just be more sophisticated in the kind of products that are being developed. And we certainly see that on our side as we're building these products. We're using data to sculpt what the opportunity is and what the market is as we go. And so, look, I think that's only going to help us get sharper and address different segments of the market that need it, because there certainly are gaps that we see every day in the marketplace. And I know you guys do too. And so that's what makes it exciting for us, because I don't see any end in sight to what we can do.
Do you see refinancing in 2022 kind of falling off a little bit as far as volume?
I would say so. I mean, I don't, if you look at, I think the latest from MBA was a 67% decrease year over year in refinance. I don't know if it's that severe. That just seems like a lot to me.
That's a lot. Yeah.
And especially given, look, I think we've all kind of rang that bell about 10 times over the last 10 years.
Right.
And it always seems to be better than that. I also feel like, look, there's a lot of equity that's been created in the market, and the cash out opportunity is huge. And, I just, again, coming full circle to the beginning of our conversation, that's where I cut my teeth in the business, is cash out, debt consolidation, refinance. So, I know the power of that, of sitting across the table or being on the phone with people and being able to change lives with the way you can restructure debt and open things up. So I think there's a ton of opportunity there. And I know at Caliber, we're going to be putting a lot of emphasis in that.
Do you foresee a lot of originator layoffs in 2022? I mean, it's already kind of starting in a few different companies, but because of the volume going down, do you see an exodus of people in the loan originator seat?
I mean, there could be. I mean, we've seen that in the past. Look, when things are hot. As a mentor of mine has said in the past, everybody looks like an athlete when you're running downhill. And so there's going to be some people that stumble to the side of the road. But at the same time, look, as much as refi is going down, purchase is going to go up next year. New housing starts are going to go up. There's a very robust purchase market. And so great loan officers are going to find a way. And we just see that over and over. People are constantly kind of writing the obituary on loan officers or brokers or whatever. And look, I mean, this is a robust set of people. It's a hustler's business. I really think that, we're going to come out, continue to grow and be strong.
Yeah.
You said
No,
key
for sure.
word. Great loan officers will figure it out. There's not a lot of great loan officers out there these days. There's a lot of mediocre ones that are just, like you said, running downhill. So I think we're going to see. I think we're going to see some loan officers leaving.
But from a wholesale standpoint, right? I mean, for the most part, like if you're a broker, like you already got the balls to kind of go out there and figure it out on your own, right? You're not getting fed retail. So I think if anything, it'll probably be a shrinking of the big retail shops, loan officers, right? But probably not those.
Not a caliber.
Not a caliber.
But no, again, you had positioned yourself though with the products that you have. I know that's a big part of it.
It is, and I say that with caliber because look, we've always tried to position ourselves to be in a place of strength on the purchase market. Just briefly say, for our retail group, that's been a big thing that they have always worked on and prided themselves on, and we've been the beneficiary in the wholesale side of that because we get a lot of the products and insights from that. And so, being purchase centric like we are over the years, that's probably why I'm less alarmist about kind of what's going to happen in our sphere and the LOs that we're talking to every day. And like I said, look, I'm an optimist that I think there is so much opportunity there and still so many untapped segments that we can continue to build momentum.
What do you think about the new loan limits? It's a big jump from where we were. It's one of the biggest ever, right? So how does that make you feel? Does that make you feel anything, or is it just part of the fact that we've had such massive appreciation in the housing market?
Yeah, I look at it more as the latter, Paul. That the reason why it jumped so much is because housing values have jumped so much, and the need for affordability. When you think about FHFA, that's their charter is create that. And look, you can't get into a house in some markets for less. I wouldn't
call it appreciation. I call it inflation.
House
value. Yeah. It's not really. I mean, of course, like the loan limit jumped by what was it like? 18% or something like that.
Right.
Yeah.
But so did everything else. Right. I mean, so did a Subway sandwich. 1 year. I mean, it's like crazy out there.
It is. It'll take a lot of time to catch up with the new housing starts to that. And, I think the expectation in most markets is that, from what I read, Sal, is that it's not a bubble, that there's less concern that there's a bubble here. And that, it'll take enough time to build back up. And the fundamentals are right. So
I think with that being said, the best time to purchase a home will probably be Q1 2022. I mean, when it comes to the pairing of interest rates and values, right, and being able to borrow money at such a low interest rate up to $647,200 on a conventional loan.
Yeah, but I keep saying this, Sal, and I agree with you. I think buying a house is going to get more expensive in 2022, just in general, from inflation to rates to whatever. But I still think at 4%, real estate's a very good investment. I think at 5%,
it's not a bad investment, but if you can get it at 3% at a cheaper value, I'm just saying like the time right now is like somewhat pivotal to be able to borrow that much money at a 3% rate.
Yeah.
Well, we're getting to that place where we can, or at least I can, I can tell stories about, walking to school uphill both ways. And I can, remember when, the rates were 8-9%. And so to your point, 4% is still very, very low. And you guys have probably heard this, but, look, I feel like the best time to buy a house to lock was yesterday. The second best time is today because we're still in very, very low rate environment. And I don't see the prices going down anytime soon. Like I said, the housing starts are getting better. We've got a webinar later this week with Freddie Mac on Home Possible. And they've shown some charts as we were preparing for it just to show new housing starts. And they are going up, which is good, but it's nowhere near what we need to be to fill the backlog of demand.
There's a huge. I was seeing that the millennials are at their peak buying moment, right between now and the last year in 2022. This is when you're going to see the bulk of them buying houses, and we're seeing that, and there is a lack of product. There's no way around it. There's not enough product to go around.
That's right.
So it'll be interesting to see what happens in 2020. What is your outlook on 2022?
Look, we plan on, it'll be, look, I mean, and I think, to be honest, I think everybody would say the same thing. We plan on growth for next year. Everybody plans on growth. And I say growth in the sense of market share. I think, from a volume perspective, we'll be looking to hold on because we do believe that we've always been focused on purchase, and the purchase market, by our estimate, will be up at least 12% in 2022. And so we'll look to capitalize that. And we think that with some of the things we've done that I mentioned earlier with New Res, the access to the Smart Series, the non-QM, as well as some of our pricing advantages that we can build in on refinance, that our loss won't be as severe as 67%. And so, I think that the outlook for next year is great. It's still going to be, again, last year and 2020, incredible years. We'll be able to talk about that when we're old men on rocking chairs on the porch. 2022 is still going to be a great year by historical standards. And so, I think that the thing to watch out for from a trends perspective, and we saw this a little bit in the JD Power results a couple of weeks ago, is that when you talk about millennials, even millennials are not going online to do everything. They value kind of doing it their way, just the way we talked about a portal. They're going to want to talk to somebody who knows what they're talking about. They're going to want to access their status online when they want to. And so I think the big thing that we'll continue to see next year is choice in the marketplace for the consumer to be able to access people and systems on their terms.
Do you see, Matt's big on not having a retail. Quicken obviously has a massive retail. You guys have a very strong retail, to be fair. Do you see that as a conflict of interest, or can they live symbiotically next to each other?
Look, having worked at, been a team member at Rocket for many years and now at Caliber, I am very much biased to the fact that it's an advantage to the broker because, I just look at every day my experience at Caliber. We're getting information from the retail group that helps us be stronger. And I'll give you an example. Look, I mean, on the Reconnect side, we're building very powerful models for the servicing book on how to predict when people are going to want to refinance or going to want to buy a new home. We're taking those exact models and applying them to referrals for our partners and building that. And so we learn from that. Same thing on the marketing side. Retail is very focused on the purchase. They're building great marketing for open houses, for example. We're taking those kind of insights and then we pass them back to our brokers because ultimately, customers are going to decide where they want to go. We just want to be in that. And if you put it at the most capitalistic level, we want to fill that REIT. That's our job, is to do that for our investors. And so we want to do that with brokers who are doing excellent or customers who are finding a retail outlet. But either way, we're going to be a terrific outlet and a great partner.
Yeah, no, for sure. And I could see them living together symbiotically. I don't see them being too far off from that.
I think from a originator standpoint, right? Like my concern is never with the book, like the servicing, right? Like if I built the relationship that, a good purchase loan officer does, I'm not worried about someone calling my client, right? Because if they didn't call me, then I must not have done my job. But up front in getting the deal, do you see any conflict there? Like, I've come across where, Caliber has a pretty strong presence where we're at, right? So once in a while, I'll come against a retail loan officer who, I'd have to pay to close the deal at Caliber. And do you ever see that being a conflict, like, different buckets of pricing, or I'm not sure how that works on that end.
I feel like it's so rare, Sal, that happens. I mean, and look, if it wasn't the Caliber branch, it would be someone else. I mean, I think that, look, there's a lot of options for customers. And I think you touch on the right thing there, which is that all we can do is be the best at what each of us individually do and serve customers in a way that they come to us. The main thing for me, and this has been, again, since even before I was at Caliber, is just transparency. If we're all clear with each other on kind of what the rules are and how we operate, then I think, they can work perfectly symbiotically. And I just, it just hasn't been an issue for me through the years with partners, because when we do run into those conflicts, when smart people share the same information, they tend to come to similar conclusions. We all want to take care of the partner. We've shared the right information of kind of who was there first, what are we trying to do, and move on.
Yeah, I mean, realistically, I mean, Matt's got like the biggest retail company in the country. It's what it feels like,
Yeah.
right? You know what I mean? It kind of feels that way that because he's got such a
just-
captive audience all of a sudden, right? I know he drew that line in the sand between Quickid, and I know that Caliber was not part of that. I was not surprisingly, but do you guys ever see doing anything like that?
No. Look, I mean, I'll just say, people do things for their own reasons.
Right.
And, for myself, I do believe that the broker's power is in choice. And,
Right.
I can't see a time where we would want to do something like that or force a broker. I think it's kind of like, anything else. We want the customer to have the greatest amount of choice, and for the brokers to do what's best for the customer. And ultimately, that's up to us. That's up to us to create something so compelling that you want to choose Caliber because we do a great job, because we give you confidence in it. And so, we'll leave it up to that on the playing field.
You're going to let the performance do the talking.
Yeah.
Right?
Look,
Yeah.
and that's the way it should be, right? I mean, that's, to me, that's kind of where we want to always fall out on that, is that we become the obvious choice to you, both because of the relationship and the execution.
I love it. I love it. David, next, we're going to get into 3 questions, just 3 random questions that we do at the end of the show that we do with everybody. I don't want to take up too much more of your time. I know you're busy, so we're going to get into those, unless you have something else to add before we get started on the 3 questions.
No, I don't think I have anything else to add. Like I said, we're excited about the market that's coming up and everything that's going on with the wholesale space. You've talked about some of the competitors that are doing amazing stuff. And, I just look at it as a renaissance of brokers and the wholesale industry. There's just so much great stuff. And I talk to our new team members who are coming on. And why is this a great time to be in this business? And you just look at the growth of brokers numerically, and you can see it. And I just think it's because if you think about what a broker can do today, we can compete at the highest level on technology, whether it's chat or websites, and give people confidence and options. And at the same time, we have that secret weapon of being able to meet people on the soccer field and have genuine personal relationships. And I just, again, I see what happened with those JD Power results a couple of weeks ago, and that really gave me pause when you read some of those comments that the millennials and other people who participated in it, they didn't just value one channel, they valued that ability to talk to people both in person and have the online option. So, I just think brokers are perfectly situated. So I'm excited for the future.
I love that. Sal, Brad, any questions for Mr. Schroeder for 3 questions?
Oh,
What's your favorite food?
Yeah, there we go. Well, if you had to eat one food forever, what would it be, David?
Wow, that's tough. I would probably, can I pick a genre, or is it like an actual dish?
You got to go dish, man.
You have to eat one dish it's not the only thing you have to eat, but you have to eat at least once a day.
Okay.
the rest of your life.
I'm probably just going to go something simple like spaghetti. I feel like I do that right now anyway. It's either spaghetti or burritos. It's one of those.
Doritos. You look good for eating Doritos, dude.
No, burritos, not Doritos.
Oh, I thought you said Doritos. I'm like, man, if you eat that many Doritos, you're looking great. If you get rid of one sport, one national sport, what would it be, and why?
One national sport.
It's got to be a real sport,
like an actual activity, not like chess.
Yeah.
Or
yeah, I know, and I'm here in Detroit, so I'm sure I won't make any friends. But I'm not a huge baseball guy. It's
you can do without it.
Yeah, I like going to the game once in a while. My son played when he was younger, but it's not something I'm going to sit around and watch.
The good news is there's no Detroit team that's doing well right now, so
don't offend anybody.
So you can't offend anybody. Nobody's watching.
Exactly.
All right. If you could spend one day or 1 week in somebody else's shoes, who would it be and why?
Wow. Living or dead?
Past or present? Past
or present.
Yeah.
I think it would be, I'm going to go with JFK. And I say that because I've been reading about the Cuban Missile Crisis and just kind of everything that went into that, both, strategy, the pressure, the negotiation, just everything that went into that. I mean, it'd just be fascinating to kind of be in those shoes and have kind of that high pressure, and then have it, obviously knowing that it worked out is pretty powerful.
Yeah, that was a pretty
probably
nice
want to jump out of his shoes before November, though.
Yeah, exactly. I need to get out of those shoes at some point.
Yeah.
God,
there you go. All right, Mr. Schroeder, thank you so much for doing the show, dude.
Yeah.
We really, really appreciate it. Can you tell the audience how, if they want to get a hold of you, they can?
Yeah, it's caliberwholesale.com. So you can get on there, learn all about what we're doing, find an AE, and certainly, we would love the opportunity to work with anyone and answer any questions.
I love it, Mr. Schroeder. Have a wonderful day, man. Kick ass out there.
Yeah, likewise. Thank you, guys. See you soon.
Thank you, man.
All right. Bye-bye.
Bye-bye.
Yeah.
That was nice.
That's
I mean,
a
he's a, what's that?
So that's a wrap.
That's a wrap? What kind of wrap?
I don't know. That's what it says. A W wrap.
Oh, a wrap, like a sandwich.
No, you never heard someone say that's a wrap?
No, I have. I just didn't like. I didn't like the way that he said it.
I mean, it literally. I read it off the. Oh my.
There we go. Now you got a wrap.
Spitting bars.
Spit some bars, bud. I like Mr. Schroeder, dude. He's super gracious with his time and coming in.
I like getting the perspective of someone that does operate, retail and wholesale at the same time, because there's a lot of call it noise out there in the broker community about anti-retail, right? Anti-retail. Retail's not going to go anywhere anytime soon.
No, it's not going anywhere. No,
it's not. It's just a fact of the matter. You have to be able to compete against it. You have to be able to figure out a way around it.
We got to compete against everything.
You
ourselves.
Can't bitch and say, I want you to get rid of your retail. Just hand me business. Hand me business. I don't want to fight for it. Like, it's just a loser mentality.
I mean, I've come up against Caliber quite a few times, right? And didn't necessarily feel like the pricing was on par with where we were on their wholesale side, but it is what it is. A lot of times Caliber is still the best option for my client. And the fact that they have a retail out there, and like he said, the 1 or 2% chance that your client is also pre-approved with them is just whatever. Sometimes you just got to chalk it up to it is what it is. I mean, we got to pay taxes. That sucks. But
I think the three of us have always kind of gone by the idea that we need to perform. That's the bottom line. Yeah, we need to perform, and that's what 2022 is going to be about. I think it's going to be about who can perform, and I think we are going to see a mass exodus of people in the business. I think there's going to be layoffs for sure. And you have to perform. Those are that are left have to perform. They have to find ways to get new business, and it's just going to be an interesting year with purchases going up, refinances going down, rates going up. It's going to be very weird. It's going to be a weird year.
It's going to be a roller coaster, like the mortgage industry always is. It's just going to be another loop around the roller coaster.
Yeah, I'm kind of sick. I just want like a normal year, like a quiet year, but we haven't had that ever in my career. No. So, all right, guys. So for those of you that have sat through the show, thank you so much. We can't thank you enough for listening to our little show here. Go to IREpodcast.com. You can go to Facebook /IRE podcast. You can go to YouTube. You can go to anywhere that podcasts are available to listen to us. Please like, share, subscribe, and hit that notification bell so you don't miss an episode. Other than that, we are out. We will see you next week.
Bye-bye.
Peace out.
See you guys.
You've been listening to Inside Real Estate, the nation's top real estate podcast. Don't forget to follow us at irepodcast.com and everywhere where podcasts are available.